I want to talk about some of the continuation breakout trades because we had some of those on Thursday and late Wednesday. And for those of you who were in the chat room on Thursday and didn't get the trade, or Wednesday going into Thursday, and then did not trade for non-farm payroll, I didn't want you to be more or less in the dark about what I was saying in the last update video that I'd sent out on Thursday evening, which was that we had some continuation breakout trades, and then I was looking for the possibility of more. And you might remember here there's been some adjustment to the new continuation breakout trade, but you'll notice that we had another continuation breakout trade here, for example, on the euro yen. Now on the euro yen, and we were talking about this was the one that we were talking about on Wednesday and Thursday, that continuation breakout trade, which was an extension of, or the continuation of, the previous breakout that we had over here. So, and then here was that continuation breakout trade that we executed, and then we got that bounce where it came back up and it stopped us out minus 55 pips. Again, 55 pips will usually keep us in the trade, and we talked about this in the update videos throughout the week, and then also in the chat room each day as each trading session continued to go on. And we were again assessing the conditions and whether or not we expected price to continue to remain or possibly move to the final target, which would have ended up or resulted in a 150 pip target. So again, whenever we take continuation breakout trades, we always have to look at the price swing high or the low that created the continuation breakout trade. In this case, it was a move to the downside, so we had to take a look at the price swing high that created the continuation breakout trade, which was all the way back up here. And as we always say, that when, and as I always say in the chat room, that technically the stop loss has to be placed above the last price swing high. That's the technical proper way to incorporate support and resistance into your stop loss placement. But it doesn't necessarily mean that we have to use it. It's just something to give us an idea that if price retraces and it hits a retracement level like the 50 or the 618, depending on where that is, it may be more than or further than the 55 pip stop loss that we use. So again, that 55 pip stop loss that we use generally will keep us in. As we always say, it's accurate 90 to 95% of the time, and this is one of the 5 to 10% of the time that it's not going to hold us in. The trade itself works, the structure works, it's just the stop loss. And again, with the market dropping 1,000 points on the open, and we see these big moves over the last few weeks, it wasn't any surprise that we could probably see this type of reaction where it would go much further or a little bit further than the 55 pip stop loss, yet the trade would still remain intact and then eventually reach that target. So when we got these additional continuation breakout signal candles, remember we took this one for about 30 pips, and then we got into the one the following day. So here is what I'm talking about. In the evening, when we had reached that final target here for 30 pips, and I was assessing the conditions, I said, you know, it might be setting up another continuation breakout trade. I personally would rather see a bounce and see it maybe move up. I don't know that I would get 150 points off of it, but whatever the non-farm payroll would give us, or it might give us another opportunity to sell it. And that's exactly what it did here. It moved down to the downside and gave us an opportunity to pick up 50 pips. So earning 50 pips on this trade and not expecting a 150 pip move after non-farm payroll was perfectly acceptable. We needed to lock in profits. We needed to close the position before the market closed for trading. We don't want to hold anything open over the weekend. And then with all of this divergence that we could see here on the 1 hour chart, it was pretty clear that it was pretty overextended, because we've seen numerous continuation breakout trades to the downside over and over and over again for weeks. And as we always say, as I always say, that eventually it's possible that I could see a continuation sell signal candle and I might be expecting it to move, but if I don't look at the larger time frames like the 4 hour or the daily chart, it might not move that distance of 150 pips. If you don't look at it, it might be running right into major support and then it'll bounce or stall. And you probably are going to be wondering why if you don't stop and take a look at the 4 hour and the daily. So we're always looking at the 4 hour and the daily chart to make sure that we're not holding onto these trades too long. But again, it was okay. And we did pretty much the same thing here with the pound yen on that continuation breakout trade. But again, only 100 pips, not the 250 pip target. It was 100 pips on this one, but obviously it moved a little bit lower. But that's all I was comfortable with, because again, we had seen numerous continuation breakout trades to the downside, and they were reaching their overall extension targets or their expected targets based on the initial continuation breakout trade. It's not to say that it can't and it won't go any further. It's just that when it does that, when a continuation breakout trade reaches a final extension or the final target, the normal target that we normally trade to, it reaches a major support level, then that's where I'm going to stop and watch. I'm not going to continue to take multiple continuation breakout trades. What I'll do is wait for the breakout, let it occur without me getting in on that 3-pip entry. And I talk about this in one of the modules where we use the Tech 1 trade, which is the second entry opportunity. We wait for the breakout, do not participate in the 3-pip entry, wait for the retest of the support level that it broke out of, and then look for the Tech 1 trade and get in there. Because if we use the Tech 1 trade on the pullback after we get the reversal candle, when it's retested the level that it broke out of, it's going to provide us in most cases with a much smaller stop loss. We don't have to use a 55 pip stop loss, but we're getting in the same type of trade. But it also provides us with a little level of protection if you're getting into a trade where you see multiple continuation breakout trades in the same direction. That's a trend. And eventually that trend is going to stop, and you have to be careful. So you can't keep taking one continuation breakout trade after another, after another, after another, especially if you see it nearing support on the larger time frames. So again, that's why we got out of the trade, in addition to not wanting to hold much longer after non-farm payroll, and then not wanting to hold through the weekend. That was really my mindset through the whole process, because there are times when non-farm payroll really doesn't give us much of an opportunity. So what did we actually do with non-farm payroll on the majors, which was the euro dollar and the dollar Swiss? I'll show you the, it actually set up an HL30, and this was pretty exciting for a lot of people because they weren't really anticipating this to actually happen. Sorry about that. Let me go to the dollar Swiss. This is the dollar Swiss. The dollar Swiss, again, this was Thursday's resistance. This was Thursday's support level. And after non-farm payroll, it moved right up and hit Thursday's resistance and then formed the reversal signal candle. And we were able to sell this, again, calling this trade out in the chat room. There was 2 locations. Everybody's welcome to execute either one lot and take the first 20 pip target, or you can execute 2 lots on this trade and close the first lot at the first 20 pip target and then the second lot at the second target. So I'll show you how that worked out. The entry was 50. I'll go ahead and set it over here just to the right so you can see where 50 is. That's 50 on the close of that candle. The first target was 30 right here, which was also that fulcrum point. And then the second target was 10. Sorry about that, right there. 10. Very little retracement after it hit the second target. So how it works is when I call out these trades, I always give the entry, and then I give the first target, and then I give the second target. And then it's up to students, if they want to execute just one lot, they can take one lot and close it at the first target and earn 20 pips, and then they're done. Or they can execute the trade at the initial open of the trade with 2 lots. They close the first lot at the first target for 20. The second lot continues, and once the first lot is hit, or I'm sorry, the first target is hit, and we close the first lot for the first target and the first profit at 20, we set the second lot that's open at a break-even stop loss. So if price was to come back up here to 2 pips below the entry of 50, so we would have closed the second lot at 0, protecting the profits on the first lot. But that didn't happen here. It only went up as high as about 35. So the second lot remained open, and the second lot went down for an additional 20 pips from the second target, but technically it's 40 pips from the entry. We get in to sell it at 50, and we close the final second lot at 10. So we earned 40 pips on that second lot. So everybody's more than welcome to try it. There are conditions, and I warn everybody in the chat room when it probably won't be a good idea. It's probably a good idea to just stick to the first target. And in this situation, there was plenty of room. There was plenty of room from that high to the low from the previous day, and the way it was reacting after non-farm payroll, that we could easily expect price to run into that second target. So effectively, if you trade 2 lots, we earned 60 pips here. So it was 100 pips on the pound yen, 50 pips on the euro yen. We earned 60 pips total here on the dollar Swiss, which was really interesting. And again, as I said, that it was kind of exciting, is that some of the students, the new students in the coaching class, when they got into the chat room and we were executing this one after non-farm payroll, they weren't really too sure. It looked like to them that it was probably going to go much higher than Thursday's high as a result of non-farm payroll. But non-farm payroll was a little bit confusing. They were still trading off of the headline numbers for the most part and still looking at the revisions. There was a lot to consider. But again, it still wasn't trading outside of that range. I wasn't going to expect it to go any further until I see a continuation breakout trade. Otherwise, everything else is potentially just a reversal. I need more confirmation than just seeing price move through the previous day's high by just a few pips. I don't do that with the continuation breakout trade. That's why there's so much safety with the continuation breakout trade, is that we're always waiting for that 1 hour signal candle instead of just watching price move through that high. So again, the opposite was what occurred here on the euro dollar. The euro dollar, Thursday's low, non-farm payroll tested it and then created that reversal. That gave us the same opportunity to do the same thing, earning 60 pips here on the euro dollar. So between the euro dollar and the pound dollar, the euro dollar and the dollar Swiss, there was 120 pips, 60 pips on each. Now again, if you only executed one lot, or for those who did execute just one lot, they took it just to the first 20 pip target here on the euro dollar, and then to the first 20 pip target here on the dollar Swiss. It's either way, whatever you're comfortable with. Nobody has to trade more than what they, their comfort level and what their money management plan requires them to do so. You don't want to overexpose capital. Of course, you're having two open positions here, and then we had those reversal trades on the pound dollar early in the morning, where we earned approximately 40 pips here on this trade here. So that was a total of I said it was 300. It was just over 300 pips, so it's 310 pips for the day. 310 pips for the day just on these currencies. At this point, if I was to see another continuation breakout trade on Monday, or I'm sorry, actually Monday's a holiday in the United States, so we're not going to be trading in the chat room, but the Forex market is going to be open on Tuesday or Monday, either way. If you do see a continuation breakout signal candle below the support level on the euro yen or the pound yen, I most likely would not recommend selling it. I would recommend staying away from it and then looking for a possible bounce. We've seen a real big move to the downside on some of these currencies, and it's really overextended at this point. You can see a lot of divergence there. So the only ones that I'd be looking at now would be the euro dollar. This is the euro dollar 1 hour time frame. So now we're going to make our adjustments here with non-farm payrolls spike high, and then that low non-farm payroll, and incorporating the previous day's low here. I'm not sure if that is the actual previous day's low, but last week's low here. So we've got the high. If the actual low or that spike on non-farm payroll would have been the actual low, I would have, of course, left the support level down there. So let's take a look at the actual consolidation range. We've got 1.1190 approximately, and 1.10 almost 90. So we're looking at about 100 pips. It's not too small. And remember, whenever it's 55 pips or less, if I'm using a consolidation range from the high to the low that's 55 pips or less, and a 1 hour candle closes outside of that range, it will most likely lead into a head fake where it would come back down inside of that consolidation range. It has to be more than 55. I'm comfortable with more than 65 or 70. 100 pips is a good trading range. So if I see a 1 hour candle outside of this range, it could lead to a continuation breakout trade. And then pretty much the same thing here. I'm expecting that when the market opens here on the pound dollar, it might create an HL30, but keep an eye on it. Don't immediately execute. You want to make sure that you see confirmation on that HL30 and make sure that you get your reversal signal candle. I can't say for sure without actually looking at it, but it could potentially lead to a HL30 and a bounce off of that level. The same thing here with the dollar Swiss. I'm going to go ahead and open this up one click, and we'll make the adjustment here to the actual low here. So this is a little bit different than what I was doing with the euro dollar. Here we've got the actual high here, which is really close to the overall high. It really didn't spike much further, and then we've got the spike low here on non-farm payroll, creating that low point of consolidation. This is sufficient. This is a pretty big range. This is good, and if I see a 1 hour candle close outside of this range, it could potentially lead to a continuation breakout trade. So again, on the pound yen, be very careful. It might continue to move lower, but be very careful because the retracement could be pretty significant. I wouldn't trade it as a continuation breakout trade and expect 250 pips. I'd be very careful here. And then the same thing here with the euro yen. My personal preference is in a situation like this, when I see a trend that keeps going and it just keeps going, I start getting a little more suspicious of how much further it's going to go, and also the reaction. The reaction could be sharper than the 55 pip stop loss that we like to use. And if that's the case, what I'll do is wait for a considerable consolidation range to develop, and then hopefully it'll sit there for a day and a half or two, and then I'll get a breakout. That's what I would be much more comfortable with. Normally, as you know, in the coaching modules, we talk about what is the appropriate length to see consolidation, the formation of that consolidation, the minimum amount of time, and it's generally, it needs to be 7-8 hours at least. I mean, that anything less than that would be too new, and I could easily expect that the resistance and the support levels would be tested. If it was just a 3-hour consolidation range, I would expect that those support and resistance ranges, if they were tested, would just be pushed. Those upper or lower boundaries would create a situation where if price spiked up there, I would have to make adjustments to that. And that's pretty much it. 310 on Friday. We ended up earning almost 800 pips for the whole week.